What's going on, traders? Hope everybody's doing well this weekend. I am back with a weekly update and some analysis here on the market. Took some time away from trading, went on a little vacation, but now we are back in full swing. So happy to be back here with a new video for you guys. So we've got a couple of things to go over before we get into the charts. Earnings season now really has kicked off, and we'll take a look at the economic calendar as well for this week. Before we get into any of that, reminder that this video is for educational and entertainment purposes only, and in no way should be viewed as financial advice. All right, so let's get into some of the calendars here for the upcoming week. Let's start off with the earnings calendar first, as that's really starting to pick up into full swing here. Monday, before the market open, we've got Verizon, not really a market mover, but certainly interesting to watch. Spotify, UPS, GM, Coca-Cola, Lockheed Martin, Comcast, all coming out Tuesday before the bell opens. And then after the close, we've got two big ones. We've got Tesla and Alphabet. Visa as well will be interesting to watch from the financial side of things. Wednesday in the morning, not too much to pay attention to there from my point of view. And after the close as well, looks pretty quiet from my view. Thursday before the open, we have American Airlines. That'll be interesting. Honeywell, I think, will be interesting as well, just to keep an eye on. And really, that kind of closes out the week as far as any big names. 3M on Friday before the market opens. Another interesting one to watch, but not really a market mover. Certainly, all eyes this week will be on Tesla and Alphabet Tuesday after the market closes. So let's watch those very closely and see what the numbers are and how the market reacts to them. Okay, so now we're done with that. Let's get into the economic calendar here and take a look what we have in store this week. All right, Monday, we've got nothing scheduled, looking good. Tuesday, pretty quiet as well. Flash services PMI at 945. Thursday, GDP for Q2 coming out at 8:30. That will be interesting, along with initial jobless claims. So definitely we'll be paying attention to those as well. And then Friday, PCE coming in at 8:30. So we'll be paying attention to that. So it looks like really Thursday and Friday are the days that I will be particularly paying attention to any data that comes out. So, okay, beautiful. We've got that out of the way. Let's get into some charts here and go over some analysis. Okay. So where are we here? We're going to start off with the weekly chart as always and just take a look at what the candle here is telling us, as well as the location of the price here. And what do we have here? Now we've taken out the last weeks of trading completely. The week of the 8th has been completely wiped out, and a good portion of the start of July. So we're almost really back to the opening of the month of July here. Incredible how quickly things can kind of change after we had briefly made a new all-time high, and it was quite a rally there during the July 4th week. When it was very quiet, very low volume, and easy for them just to get the algo and the buys going, and then it just really was nothing there to compete with it. So now we're coming back a little bit to reality, and so what do we want to watch here from the weekly perspective, and what are we thinking, right? So from my point of view here, we're definitely going to be watching, for the bulls to have anything, right, in my opinion, right? We're going to have to, and we're going to have to probably make a bit of a zone here, right? Okay, so this is really the structure that I'm going to be watching here, at least from the bullish perspective, right? Because the bulls are going to have to, and this would at least, oh, starting to freeze there. This would at least start to, if we start seeing price come up over about 50% of the candle retracement, right? And we've talked about this type of range theory before and how we like to look at candles. So I think that 50% marker would be pretty good in this zone, right? We'd be recapturing the weekly lows here from the 8th, and we would be recapturing the highs from July 1st, right? So unless we see, I'm trying to get out my tool here, right? We want to see something like this, you know, kind of take place in our candles and get real acceptance. We see this, then I would be more likely or looking for price to start to drift up, and I would be looking probably back to the last week's open, right? I would assume that would be a likely target here, coming in right around 56.80 thereabouts, right? So that's what I would kind of be looking for, a potential retest of. And of course, this is all bigger picture stuff, so that is quite a ways away for ES, but it's just something that we want to be cognizant of, right? And this would be the only way we can get really type of bullish, in my opinion. And then if we can get over the 80, 56.80, we can start to attack probably back up here, and we'll look back to the equal highs, right? But one step at a time. We also have the scenario, right, where we just come back up and we closed pretty much on the lows. I mean, you know, it was really, I was looking personally for a bit of a short cover rally at the end of the day on Friday, and barely got it. I mean, they just did not show up. And it was actually interesting, you know, in the beginning of the week we had tech selling off, we had a bit of that rotation, and we're actually going to go over RTY, which we don't normally do, but I think that that's been a very interesting market recently and had some interesting structural developments, so we're definitely going to tap on that a little bit. That being said, we saw really a kind of a rotation, right, in the market. We saw NQ going, we saw ES going, but we saw going down, excuse me, and we saw YM, the Dow, and I was trading it while tech was falling, and it was just ripping up higher, higher, higher. Continued to make new all-time highs. We had RTY really ripping for a while as well, and then started to cool off as it had, I think, 4 gap up days in a row or something. Got a little ahead of itself. But now we're seeing a little bit of selling come across overall the broad bit of the market. I believe the Dow was down on Wednesday or Thursday at 500 points, something like that. Retraced a lot of the move that it did. It held up decently, I believe, on Friday, as well as RTY. Actually, Friday it was RTY was positive, but we just need to be paying attention to kind of these rotations as well and things that are going on, you know, with the market dynamics. So that being said, we also could see here on ES, you know, we come up, retest here, right? And then this is where we find our sellers, and then we kind of continue then and roll back over. If that were to happen, and I was looking at shorts in this zone, well, my first target would be round right close to these, back towards the equal lows, right in the 44, the 55, 40, 40s, the low 40s, 42, 40, anywhere in that general area, maybe 50, right? Up in this area. And then we would be basically, right, in the range of this prior balance. Whoops, I'm trying to draw it. That we were trading in before. That this was that weekly bull flag, right? Boom, and that's what gave us this move. Right, we start losing this, then we'll be looking. If I'm bearish and we start losing the 5542s, then we're looking to look to trade down. We're probably going to see the 5500 again or close to it. Right? I would look for trades to Start, and again, big picture stuff here. So this may develop over, a day, or, maybe a week, a few days. It's really unknown. But looking for my draw tool, and we would look for it to slowly drift. We might come in and attack here and not get all the way. Oof, that's ugly. We might come down here. Where is this price? Let's see what this is. This weekly low. Right. So pretty close to it. Watch for something like that, but only if we accept under 52. Right. So we have a trade idea or something to watch for. If we come up, potential short trade if you're bearish, or if we actually see the acceptance. Now, if we see the acceptance, now again, that short trade is invalidated. We flip our bias and we look to attack up here into the 5680s. So that's the way I'm seeing it. And let's break it down here. This is certainly an aggressive weekly candle. We did just get some news out here on Sunday. Biden is now out of the race. So let's see also, how futures is going to open. Uncertainty, non-uncertainty, securing the victory for Trump. I don't know what the Democrats are going to do. So we also have that flavor to add into this dish, which shall be very interesting to see what futures are going to open up looking like. All right, so let's break it down here, though. Let's get into the daily chart, but we have to certainly say, of course, huge engulfing weekly candle here. Failure. We tried to break up higher, broke down lower, and the rest was history. Had certainly a big sell there, as you can see. But here are the levels that are now going to need to be broken. We also have to see with earnings, we have to watch out because there is the opportunity. We did just make a huge move, right? What was the move in this week? Let's look. It was, what is this, 200 points, right? It was 100, almost to 175 points thereabouts, right? So huge move, and we often talk about running, resting. It's also very, very high possibility. Maybe, we just see something like this for a few sessions. Now I'm on the weekly. This could be a daily situation, right? If we do consolidate, we do see something like this, I would consider this, right, bearish consolidation because we have not broken over. We're hanging out by the lows here, building up the selling pressure, and this is just going to get more and more fortified as people are looking to get out and sellers start to load up and to start to really build up a wall here. The longer we hang out here, this is going to happen. The more likely I would go with the scenario that we would end up breaking down from here. And if you're not in, there's no problem with that. We break down, look for the retest, and then we look to hit that short. And we're really aiming for that 5,500. So we'll see. Let's start to look here at the daily chart a little bit. See what we can take away if there's any other certain things. Let's just mark off the top of this previous. Okay. So I think this is pretty well mapped out overall. I think the only thing I would potentially do here is kind of mark this down a little bit lower and kind of give myself a nice real kind of structure there. Right. See, I'll also be invalidated in any type of a short thesis. Certainly, again, if we're over here, we've got a chance to attack. If we're over, 5,600, 5,611, I'm feeling a little bit better. Maybe there'll be some trades, a little thing up to 26.25. But over 25, then I think we've got a nice 40 point range for a trade up here. Potential rejection zone, of course, there too. So we've got our potential rejection zones here, right, for a daily lower high, and then we've got one here. as well. That's the last line of defense really for the bears. If we do start seeing buyers setting up right here, some acceptance in here, above 5566 basically. Why? Because we did recaptured, right, these lows. We can see what happened when we broke the structure, came back, retested it, confirmed that, boom, right? So we know this area is key. So back over 5666, more than likely, you know, we'll see back to 5700 and then attack the equal highs again if it gets over 5700. So that's what I'm seeing there on the ES. So let's see. It's in the bear's court for now, for sure. And we were talking about seeing this, you know, 2 weeks ago, even, you know, we've been seeing this hot reading again. On the weekly, hold on, let's go back to see if, see on the weekly, it hasn't even budged yet. Look at that. It's still showing hot. We haven't even lost the momentum in there. So, you know, I still would be partial, of course, long term, or, you know, not long term, but bigger picture. Weekly, yeah, we've done some damage, but it's all still bullish. In my opinion, if we break 5,500, though, then we'll target that gap and probably drop another 50, 60 points thereabouts, maybe 45 points. So that's what I would look at under, but we're not there yet. So this is an interesting spot for sure, and you know, it is worth noting we are underneath the daily 9 and 20. 50 though is sitting at 54.95. So still some room for that. But you know, nothing really to be concerned about under the 20. It's short-term momentum downside, but I mean, you know, we're not even near the 50. Let it play some catch-up. So I'm not overly too concerned overall, although it is ugly looking. But we take it level by level, as always. All right, so let's get a little bit more granular. Let's get into an hourly chart. Let's look at, and look, we are really at an interesting area here where we're going to open. So let's see. Let's look at some day trading levels for us. Then we'll move on to the NAS, if I can find them. Okay, here we are. Okay, cool. All right, so what needs to be defended, right? If we start getting under this 55, let's do the bullish side first. All right, so we need to hold 55.40. Okay, we really need to hold that if you are bullish, but still I would not really be looking long, right? If we just hang out under here, still bearish consolidation. What does this really look like? Just a big old bear flag, and we're going to open up and then poof, we're going to head down, right? So I would be very cautious on that. Now, what's the first thing that would need to potentially happen from my point of view? You need to see some acceptance over 55.60, give a 62, 65 area, right? We see some acceptance over here, right? Got our candles. Now I'm feeling a little bit better, and these are just counter trend trades, but got a potential move. I mean, and that's a decent one. That's about a 20-point move there up into the 80s. 55.80 could be the next target. Mind your lows here from 5 o'clock, so 55.77. You know, taking partials, of course, on the way. Now we start getting over the 55.82. Okay, we've got a little bit more room there. We can take a try at 55.95, maybe tapping that whole number psychological at the 5600. I would be feeling the trend is starting to get neutralized if we start seeing price hang out here, right? But we're not truly, if we're bullish, we're not truly out of the woods, in my opinion, until we're back over 56.10, 56.08, right? We need to recapture this area is going to be key for the bulls. I'm trying to draw it in here. is going to be key for the bulls seeing it here. Now we can start talking about a change of a potential hourly or 30-minute actual shift in the market, right? What we could also potentially see and watch out for, right? We come up, maybe do some type of an inverted head and shoulders, something like that, and then we finally bust up and break. So watch out for that as well. You know, that could end up forming, within this kind of range. I'm not showing you the inverted head and shoulders. I'm just showing you that where it could be happening. So watch for that, because this will be the neckline either way if that starts to set up. Right, so over that 10, then we can start attack 56.20. Excuse me, 30. And then over that 56.50 in that general area would be my next target. Now, if we start to break under 55.40, 55.20 I'm looking at. And then we're going to be looking under 20. Then we're going to start to target those bigger daily levels that I was mentioning before, closer to that 5,500. So that's what I would be watching for under that. Okay, all done with the ES. Let's get into some of the NASDAQ now and see what we can take away from the tech sector. Oops. Okay, here we are. All right, so we're going to start off, as always, with a blank chart here. Actually, let me get a little sip of water. Okay. So, what do we have here? Now, tech sector has been notably weaker than the rest of the markets here, and we can really see that reflected in the size of the candle. Certainly in ES, it did not engulf the complete range. This one has engulfed and closed by the lows of the 2 weeks ago, the upside move, right? So what I'm looking at here, we're certainly going to mark off there we go. This is the week of the 1st. This low, which is, it looks like it's going to be pretty much whole number at 19,800. So it's 19,811. Okay. So that's going to be the bare minimum. Right now, we close the market at 18,700, basically 100 points below. So I'm going to be watching that very closely. Now, there's certainly the potentiality we made a huge move, even bigger in the tech than we did in ES as far as the selling pressure. I mean, just in this week, it looks like over 1,000 points. Okay, so we talk about that running and resting. So we also remove this. We also just want to be careful of this. I mean, 100 points still, it's tradable, but we want to keep in mind of what's happening bigger picture. So we could get trapped, and that would be the most bearish, obviously, scenario that would be taking place if we had that type of consolidation. We may come up a bit higher, and it could still obviously be potentially bearish. Now, what do we talk about when we talk about that range theory, right? We're going to do 25%, right, of this, and then we can do of this weekly candle, and then we've also got our 50% as well, right? So as long as we stay under 25%, still have to keep a weekly bearish bias, and if 50%, that's the last stand for the bears, and over that, then again we can look to attack the upper parts of that range. So we're going to also mark off here, this one's 1811, and this one was 19,811. This current weekly low, which was a lower low, came in at 19,654. Okay. So now we've got that marked out. If we obviously start trading below this weekly low, that's going to be more bearish here. And, this, it's not going to be too hard to really, we're going to have to look at what the volume profile looks like on this, but we'll have to see, how really strong this structure is. Okay, so the other thing I'm definitely going to be paying attention to, right, it's going to be about, we'll have to mark off this, and it's a little tight because we have this high here, but it's going to be the weekly low here of the 8th, the week of the 8th, which is going to be 23.35, and we can get up a little bit higher because I also want to pay attention to the week high of June 17th coming in at 23.71 thereabouts. So I'll be paying attention to that as well. Let's get this one a little bit lower because it is not correct. There we go. Right, so these are going to be some key weekly levels that I am going to be watching here for next week. We can also go over, and I'll show you on another blank chart. Oh, I don't think I have one. We can also break down this if you want to get the 50%. And basically the 25. It's going to be about there. So, I mean, it's a lot. I mean, overall from the weekly, you can still stay. It's still bearish under 20K, you can even say. But this is going to be the first test. If it starts to attack these lows here and attack these lows, I mean, it's not very far from the lows of the 24th that week. That's only 30 points away. So we're going to definitely pay attention to that. I think that can be a good pivot as well. If we start seeing a recapture back over 19,730, I would be betting that we could see about another 100 points and would probably retest the lows here of the week of the 7th. And I would look for trades up into like I would be expecting to see 19,800 thereabouts. So watch out for that. So I would see over 30, I'd feel a little bit more bullish. Let's get into the daily chart here. And bullish is in like a counter trend trade or maybe a couple of days of upside because, like I said, and we've got to recapture 20K at the minimum for a chance to even get into talking about the 50% retracement of the weekly range. So don't get it twisted as far as that. There a lot of damage has been done that we're gonna need to repair before we can even start talking about things looking too bullish overall. I mean, yes, obviously the monthly, as we went over, is fine. You could even make a case that this could be, the bottom of a bull flag here. But we'll see. See the gap from the contract roll is finally gone. All right, what did I want to go into? The daily. Okay. Okay, so what do we need to see from the daily perspective here, right? Now watch for this, right? We saw this pattern here. What we could very easily see is this happen again. And in a downtrend, these counter trend moves can be very vicious. I mean, from the low here, this was 23.36. It ran, what is this? That's 200 points, something like that. It ran up into the 700s. So you can see these huge moves, right? You just have to make sure you're on the right side of it and keeping everything in context. So with that being said, let's watch out for something like this to potentially happen again. But what needs to happen overall from the daily perspective? Well, at the very, very least, again, we talked about that 20K pretty much in this area here, right? Because even if we trade up into here, what is this? This is just another bear flag. Even here, just another daily bear flag, right? Nothing. No change. We start seeing trades up over 20K. Okay, then we're starting to neutralize it, neutralize the trend, but we still would have to get over, in my opinion, 20,100, 20,165. Seeing some acceptance over here. Candles up in here. Okay, then I'm gonna feel a little bit better, and then really coming and attacking right around here, the highs of the 17th and 18th and the 28th, around 20,270. That would be about that 50% thereabouts. Anywhere in this range, I think, is right about that 50% retracement of the daily range. And then if we get over there, okay, we can start talking a little bit more bullish. But until that happens, anything in here, bigger context for me, is still overall bearish daily. So let's just keep that, kind of in mind. But there is those counter trend trades that could potentially be there because you don't want to be short in a rally like this against you for 2 days. That's going to be painful, right? But we have to also be aware of that, even though we can see a big move and everyone starts getting all bullish again, that this might just be what's happening, right? And we just see, kind of like this. Big candle like that. Whoops, that wick was really something else. But then what ends up happening? we get the old H, the old rollover, fizzle out. Right, so you can even consider, right, this area might be where you want to find a better location for a risk to reward short. I'd be very cautious. Yes, I'm going to have a little bit, obviously, of that bearish bias, but am I going to be shorting in the hole? Not really, not after 3 days. Be very careful here. But let the chart, of course, be your guide. Over the 30s, we were talking over the 730s, I think is a good start. For me, I would love to see really us recapturing 19,755. Okay, then I'm down for a 100-point retracement right here. So we'll see. Let's get it granular here and look down to some smaller time frame levels. Okay. So we really got to hold this, right? This is the previous lows. Everything stands on right here. We can hold 700, the figure. All right, let's see if we can get some drifts up into maybe 150 points. I mean, there's plenty of areas where the bear still can even jump in. Have to consider the 800. Right, that still gives you a 100-point bounce, which is great. But that might be a first target. We get over the 100, maybe then we can make it to the 850, 19,850. We get over 19,850. All right, then let's try to attack 20K. Still, it could get stuffed a little ahead of that, maybe about 40 points lower. So watch out for sellers to potentially start to come in and maybe in the 70s, 19,970 area. That's definitely been an issue zone before. Right. So be aware of that as well. But if we got over, then, and we base, all right, then we can attack up 20,100. Over that 20,171 area. Let's look at some downside here. We kind of already went over that on the daily chart, but we really start taking out this low. Watch out. I think it's an easy drop down to 19,600. 50 points lower, thereabouts. There we go. And we'll refer back to the daily that we were just on. Right. 600 here, under that. Got, geez, another at least 60, 40 points along the way, or 60 to another 100 points down. 92. So I would watch out for that. But you can see how this is such a critical zone here. So it will be very interesting to see how futures open up with these announcements that have just come out a little bit ago. Yeah, I mean, under this low, there's just no ways about it. We're going to attack the high of this breakout. That's what's going to happen. 19,500. Oh boy. All right, let's see where we open. All right, let's get into some other data here. Oh, actually, we're not done. Let's look at, I haven't looked at the dollar in a while. Let's see what's going on in Dixieland. Okay. Interesting. I haven't looked at the old dollar here in a minute. Looks like we had a little look below and fail at 104. Recaptured that. Where did we trade down to? Remember we talked about the 103.80s before, but we got a little bit lower. All right. I mean, dollar still holding up. Looks like a little inverted head and shoulder. Definitely did break this wedge, though. It tried to Came up, came down, tried to break out again, couldn't break out, fell down. More than likely, we'll probably end up coming back and retesting this trend line. That's what I would have to guess. We're still just overall in the bigger range, so nothing really going on here. So yeah, let's see if we get a little inverted head and shoulders. If the dollar gets back over 104.50, watch out there. More pressure to be seen on the equities, more than likely. We see that acceptance over 50, and we're going to look for that 105 again, maybe 104.80. Again, more pressure. We'd really want to see it stay under under 104 would be great. That would give us some nice lift in the market. But I think now really the 104 for the dollar, and we talked about this before, it's kind of, the market's gotten used to it, and the market doesn't really care about it being up here anymore versus when it used to be like 93 or 92, $95. So, unless we're seeing higher readings up here, I don't even think it puts that much pressure on the market like it used to anymore. So, yeah. All right, let's. I did say that we wanted to go over RTY just a little bit from a daily perspective because we have to pay attention to the rotations, and also because it did really make a huge breakout here, and we have to look at this retracement. Okay. Got a couple ways we can look at this. Okay. So, you can see here it was trapped. I'm wondering if I just want to draw it out again. You can see here it was trapped. Do I have a blank one that I can just do? Right? We were in this range for God knows how long. The godforsaken range. I'm doing this real quick. It's not going to be that. But I think it's always good if I draw it in front of you guys, right? Rather than it already being done. Range, compression, expansion. Finally got out, had the move, right? And we went balance to balance, right? And then we came back. Excuse me. And traded right back into this previous balance, right? From here. Bada-bada-boom, bada-boom. Okay? Now we hit back. As long as we hold, right, we want to hold the lows now that we've recaptured here. So, if I'm bullish on iDubbbz, this is good for me because now I'm be looking, and you can do this through whatever market, IWM, or you can do it through the futures market. But we come back here anywhere from 22.40 as long as that holds, or 21.40 as long as that holds, with a little bit of leeway here, then it's just setting up for us to come back up into this area, and then we come back, attack the middle again, equilibrium, and then over that we attack, here we could come into some issues, right? So do this, pull back a little bit, and then we attack the highs. So if that plays out, I would have to say that if we see acceptance back over 2260s, 50s, my target's going to be 2355 thereabouts on the Russell. And then if we get over that, then I'm going to target the all-time highs again at 2460. We could see some resistance here. Maybe we pull back and then we finally, make the move, come back, retest, and do something like that. So there's definitely a trade there. I'm not sure how I'm going to attack this. I'm going to say I'll probably do it through options and iDubbbz. If this fails, then watch out because it's going to dump though. So that would be a real big false breakout. They've certainly got some levels here that it can hold, but because of that happening, a false breakout like that, especially on a weekly, we'd probably just drop back down here. and that would be a big that'd be a big buzzkill for the small caps. But we'll see. Small cap summer. So that's the path. I wanted to go over it because there's definitely a trade idea there, and just this broke out of this huge structure that it hadn't forever. You know, look how long this is. This was what, a 5-year chart weekly. I mean, ridiculous. So you know, this is a big development in the overall picture here for small caps. That's why I wanted to highlight it. Okay, so now let's move along here in TNX. And of course, you know, TNX, the rates, it's the most sensitive. Small caps are the most sensitive to the rates. We're going to have to definitely also pay attention to what Powell's saying. Now he's saying the federal funds rate now, I believe, went to 100% chances that we will be seeing a cut. So, you know, they are the most rate sensitive sector, or market, I should say, or index. So we have to pay attention to that as well. All right, so what's going on here with TNX? All right, so we are we are underneath this 43.5. That's good. Let's stay underneath that, right? We want to stay under the highs of right here. As long as we can stay under that, if we come up like this, bearish consolidation, then maybe we can make a dump. Maybe we target, if that breaks, we could target down here around 40. If that breaks, I mean, I bet we could come down to 38. That would be great. TLT would be ripping at this point. This would be great for small caps and in the market overall in general. So let's watch that for this bearish consolidation. And then, of course, if this happens again, small caps, IWM. If this drops, IWM is going to go. So let's pay attention there. All right, let's get some more of the other data. I really appreciate you guys spending the time with me. It's great to be back making this video for you guys and doing some prep here on the market. Really appreciate everybody. Okay, let's go here. How many stocks are trading over their simple period moving average, 50-day and 100-day? Let's see here now. The 50-day, we were watching this compression, right? We were watching, and boom, we got this. This was the huge July 4th rally. And that is a beautiful thing to see. Of course, I was on vacation when it was literally the easiest market in the world to trade, but that's fine. You know, time away from the markets is definitely needed. Okay, but what happened here? We came around right into around that 75 level, and you can see this is when we started to see this pull in here. Overall, but we might stop right around this 64 area, right? Retesting the high of this reading here. It is a little unconventional to use, you know, quote unquote technical analysis on things like this, but I find that it actually does work. So whatever. So let's watch to see what happens at that. We could get a little bit of a pop here. So let's see about that. Everything's strong and stable here on the 200. This is, of course, a lot less volatile because it's a slower moving average. Just below the 75% mark. Let's see if it pops up and retest that over this week. A little hot and spicy here on there, so we might have a little bit more downside, but I think we'll get a little bounce this week. That is just my personal opinion. How far of the bounce it will be, I do not know. New highs versus new lows. Ooh, look at that. Right into our 417 area. Too hot to handle. Just came right back down. Basically a collapse here. Back to where we were. At least we're over the zero line. I would watch. I bet we see like this. It comes from here and bounces up over the next, you know, but watch out. If it doesn't get over that, you know, that's what we really want to see. But I mean, as long as it's over the zero, it's fine. This is okay. So no biggie there. Overall, too much. It's a little SPY chart going here. No big retests. What are their other trends? Ooh. Came into a big weekly trend. That's what stops by. It's like, hello, nope, bonk. It's good HYG junk bonds. Okay, hey, look at this. Okay, okay. See how she's perking up a little bit? This leads to me to believe more of a bounce type of theory, to see this junk bond start to curl up like this a bit. Let's see. Monday, Tuesday, let's watch for that bounce. Let's look at the rest of the bonds. What are the rest of the bonds doing? Okay, pulling back here. Nothing. No. Okay, well, I'm definitely going to pay attention to this ratio here with it creeping above the 50. I am not a fan of that. Let's keep an eye on this. If this starts to get back above the 50, that might be a little bit more of a risk-off thing going on. So it's just peeking its little head over it now. But nothing yet to be concerned about, because it could just go back over like this and crash right back under, which is probably, I think, the more than likely thing to happen. But I will keep an eye on that. TLT, just kind of stuck between this 91. As long as it holds 90, 91, 80, bonds are okay. Maybe it could be setting up with an inverted head and shoulder. Head, shoulder being formed here. Kind of ugly. Meh. Kind of a stretch. It looks like it just can consolidate, but it needs to get back over 9. It needs to get over 94, 95, basically 94.75. That's good. That's been the issue. You can see it here, 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 here. So that's the level to watch. Needs back over 94. We get over to this 94.75. You'll see TLT and X roll over, and then that will help out the small caps as well. So until then, it's kind of just chop zone. If we start getting under 92, 91.80, could be an issue, and see more of a push up in TNX. Let's look at the Dow also, as I was mentioning earlier, making huge moves. Oh, but look at this on the Dow. Again, we want to be in stronger markets. If we're looking for longs, I mean, sure, tech's going to come back eventually, but it's a lot trickier. Much easier trade here on the Dow if we're looking to swing any calls on the Dow. Coming back, basically retesting these all-time highs. Not quite there, a little bit more downside. Looks like it could do about another 200 points thereabouts, but coming back in and retesting this area. Super simple, super good setup here for at least a bounce. Whether it goes to all-time highs, I am not sure, but if there was one market that I think could have more potentiality to do that, it would be something like the Dow, considering its strength overall versus the rest of the indexes, which we had been over already. So, but either way, I mean, from 40,000, basically 40,100, even if you retraced up here at 600 points back up to the high of the 22nd, I mean, that's still a great move. Could see that, or could see even if it gets over that, it even could go up about 800 points. Well, 500 points from here, but it could go up to the 4,800s, 4,850. So I'd watch out for that. It could be nice setup. Boom. Whoops. To here and to here for your first target. Right, you attack this previous high right there, and if it got over, then you would be attacking up here the lows from the 17th. Transports, look at that, 4 top, quad top, boom, could not get over, could not get over, could not get over. Nope, 16,265 level to watch there. Came right into volume point of control. Nice comeback, though, on the transports. Overall, though, just kind of really stuck in a range. Whoops. I mean, this is just the range really that is just kind of trading in. So find the edges and trade around that. But no real kind of canary in the coal mines or counter trend signals or anything I see from the Dow. Let's do a quick look at the VIX. Oh, there we go. Take a look at the put call ratio. Ooh, was way off sides for a minute. You can see here that's why we dropped so much. Look how off sides they got. Snap back to reality, and that's got to be a glitch. We didn't go down at $10. You can see here we kind of just based out right around our zone and then just started to clear up. As long as we're holding over 15 and 1575, have to remain bullish on the VIX. Keep an eye on the ranges as you're trading the indexes, though, and all underlying stocks volatility will be raised. So wider ATRs, smaller size, wider stops. Remember, you have to trade differently when the VIX is 14 or a 12 handle versus if it's a 16 or 15. So for me, again, the pivot is 15 and 1575. Anything over that is bullish for VIX, and we have to watch out for the potential moves into the 17s or maybe even 19. So watch out for that. Starting to get a little spicy on here. I bet it probably cools off and runs sideways for a little bit. It would be my guess. But let's watch. Let's look at the internals on the VIX. Cooling off a little bit here on the VIX futures after being in a deep contango. No backwardation yet. A little cool off. VVIX right off our complacency zone here coming up. We are not over the 103, 105. We could stall out, but that's going to be, if we get over the 103, 105, then watch out. We've got way more volatility coming our way, but as it stands right now, not even over 100. We could just kind of run sideways here for a bit, as I mentioned. But we'll see. As long as we stay about over 90, you have to still be a little cautious on the volatility front. So I think that's about everything I've got for you guys this week. Again, like I said, it's great to be back in the saddle. Really appreciate all the subscribers, the followers, the supporters, everyone that comments on the videos, comments on my Twitter, likes and interacts with me. Really means a lot to me. If you enjoyed the video and you haven't already subscribed to the channel, a simple thing you can do that puts a smile on my face, I would much appreciate it. And remember to turn on that notification bell as well. That way you are updated every time I post new videos about trading and the market. So we're going to close it out here. Enjoy the rest of your Sunday. And remember, a prepared trader is a profitable trader. So let's plan our trades and trade our plan. Signing out. I will see you on the internet. Take care.